Good morning, everybody. It's Chris from Serene Education with the 4 majors nights update for the 19th of November 2013. Hi, guys. Going to be going with 4 majors as per usual, using our FX8 Ultimate template plus the indicator bar down the bottom here. And let's crack on with euro against US dollar. Let's have a look at the 4-hour time frame. We've seen the price trading above the monthly fib, which is important. However, we've subsequently had a pullback, and we saw a pullback yesterday after the breakout. So not a bullish engulfing candle, more of a shooting star, and subsequently we had a pullback to now the support level. Prior resistance, as you can quite clearly see, through the 13th of November onwards, and then we had a nice little breakout, and then the pullback, and now we could see this continuation. That's what we're looking for ideally now, is a nice continuation candle, nice bullish engulfing 4-hour candle that would then break the prior high, and subsequently then we can start to target that weekly fib 23.6, which actually marries up quite nicely with our 4-hour institution moving average. So from the highs over here to that level, you're looking in excess of 48 pips and change. Take away the spread, and it's still a nice little healthy profit to be made from that particular pair. So looking very, very much for that 4-hour candle close. So you can see the prior 4-hour candle very indecisive. It's still above the monthly fib, which is good, but you'll notice that there was more selling involved in that candle than buying, and subsequently you can see that the long wick to the upside and more pressure on the downside of that candle. However, it's still maintaining above the 50% retracement level on our monthly, which was prior resistance, and clearly now looks like to be new support. As long as it trades above the 50% retracement here on the monthly February retracement, then we should still looking for higher highs. Ideally, if you're looking to get into this trade, looking for a nice positive candle, the candles we're seeing right at the moment now are very indecisive. Even though they are above the 50% retracement, we want to see a more decisive candle. Once we get that, we have everything we need for this template. We have our arrow candle, the RMO set above. This is above, and hopefully we get a nice bullish engulfing candle. This will go bright green, and then we can start heading towards that monthly and weekly fib on our 4-hour time frame. Down to the sterling US dollar 4-hour time frame. Here again, you can quite clearly see a lot of resistance above price at the moment. We have seen this taking place. We had a negative pullback candle yesterday, and subsequently since then we've seen nothing but consolidation on the 4-hour time frame. A lot of indecision candles, one with negativity, one with positiveness, one with both, however very small, non-directional. However, you can quite clearly see that the indicator is still painting a positive picture. The indicator box over here is primarily red. You can see that we're trading above the institution on our 4-hour time frame. We have a blue arrow, blue candles. All the moving averages are below price. RMO is above the zero line. The only thing that we don't have in our favor at the moment is the OSMO indicator, still below zero, and that won't change until we actually get a nice bullish engulfing close above the prior 4-hour close at the moment, which would then make a new high on this time frame. And swing highs is very much upside trend. We get that, get a nice juicy close above 16,133 and change, then we could target that all important weekly, the next weekly level, which is above, which is a healthy 118 pips away. So we're looking for a nice bullish engulfing candle close on our 4-hour time frame. This needs to jump back over to the zero level, and this to remain above the zero level to tell us we're still in a very strong uptrend at the moment now, consolidative, and we're not making any money going sideways, so therefore wait for a decision from the market. It could either be one of two things. If it's not making new highs, then it'll start making new lows. If it gets below the institution, start looking for selling sentiment, i.e. red arrow, red candle, RMO to dip below the zero, and the OSMO to stay below the zero level, and then we could target the weekly fib level at the downside here in the shape of the 23.6. So we know where our target is if we get the nice close below that institution moving average, and it's a healthy 135 and change. Take away the spread, more than enough in there to see a valid return on time invested. The other scenario would be a continuation higher, break the current resistance level high here that we've seen, and then we can continue to the upside. Either way, we've got to wait for a defining candle, and the strategy template needs to follow or adhere to the rules. US dollar Swiss franc, here we go. You can see on the daily, yesterday a bearish candle to the downside, but by the close of play, price had actually fallen in the top end of that candle. So a bit of positiveness, even though we saw negativity, and we are seeing still swing lows. Drop down to our 4-hour time frame. You can see quite clearly the swing lows on the intermediate time frame. Swing low, swing low, swing low, swing low, swing low. Not making new highs. However, you'll notice that the institution moving average is still below price. This indicator box over here is primarily red. So we should be looking for negative sentiment, guys. The thing we need to get below, though, that's going to be more defining for this particular pair for shorting opportunities is we need to get below the institution. But the nice thing is though, if we do see price closing below the institution, we're getting a more defined candle. You can see that the candles that we're seeing now on our 4 hour are very, very small. Even though they are moving lower, they're very small and non-defined. We have a red arrow, candlesticks are red, RMO is below, the OSMO indicator is below, which is good. However, it is dark red, and dark red means there's no true selling sentiment in this case. We want to see true selling, and that's going to come in a nice juicy bearish engulfing candle, get below the institution. R squares on here are going to go positive to tell us this is genuinely negative sentiment, and then we can start targeting not our next particular target, which would be roughly around the 38.2 on my weekly fib here, which is a healthy 300 pips away and change. So more than enough in the tank to see a value return on time invested. You just got to see a more defining move for this particular pair. Last pair of the day is the US dollar Japanese yen. Let's have a look at that 4 hour time frame. Now again, not been making higher highs just recently. So if she's not making new highs, then she's going to start making new lows. Okay, and that's exactly what we're seeing now on the 4 hour time frame. Swing low, swing low, swing low. You'll notice that we have a red arrow. Let me just get rid of all these lines on here, guys. You notice that we have a red arrow. However, the candlesticks are very much blue. RMO is above, but the OSMO indicator is bright red and below the 0 level. So we're not really getting anything that's really matching up. In fact, if you look at the 4 hour time frame, I just zoom out, you can see that price has been making healthy swing highs, which indicates positiveness. Swing high, swing high, swing high, breach, but into the institution moving average, swing high, get swing, swing, swing. So it's swinging high and not making any swing lows on this trend. The moment it gets below this price swing over here, then we're likely to see the arrows, the candlestick starting to change, the RMO starting to dip below the 0, and the OSMO indicator remaining below the 0 to tell us that that is genuine negative sentiment coming through. Here we've got to, if this is to be a genuine move or up move for the US dollar Japanese yen that we're seeing on the long-term sentiment, my monthly fib, which is trading right into right now, needs to remain below support or below price, acting as support. Prior resistance becomes new support. Breakout, pullback. Now we're looking for a continuation candle. Nice juicy bullish engulfing candle. Nice hammer with an engulfing candle to confirm that is genuine buying. And once we get that, then we'll get a blue arrow, and then we have would like to see the OSMO indicator getting above the 0. The RMO is already above, so it's telling me we are in a trend. It's just that we are seeing a lot of mixed signals because price is consolidative and a positive trend. We do need to see nice bullish engulfing candle here and the arrow to comply, and then this to jump above the 0. Then we are looking for higher highs. If not, continuation low. But we need to see a more defined candle on the 4 hour, a more bearish candle. Here you can see a lot of indecision candles. We want to see a bearish engulfing candle break lower. The candlestick needs to become red. The RMO needs to drop below the 0 level for the first time since the 20th of October, which is a negative signal indeed. Get below the monthly fib here, which is also a negative signal, and the OSMO to remain below. So you see I'm following this template very, very mechanical in its approach, and that's the beauty of it, guys. It's got to be very mechanical. Take the emotion out of it. We don't want to trade with emotion when we're trading currencies or anything for that matter. Got to be very, very mechanical in your approach, and that's the beauty of this template. That's it, guys, for today. Short and sweet, to the point. If you are using this template, please back it up with some money management rules. Very important. Great template, but if you aren't following money management rules, it's worth nothing. Okay. Adhere to the rules, guys. It's so important. Anybody who's interested in this particular template, please drop us an email, and you'll see that at the end of this video. Get a hold of us. We'll have a chat with you, and we can get it to you as soon as possible. Other than that, I'm going to leave you with it. Have a fantastic trading day, and I'll catch you guys first thing tomorrow morning. Until then, you trade serenely.